Gold and silver reached higher grounds but failed to have a perfect picture. But anyway, there might be a chance for really high gains in the near future. So let's have a closer look what it takes and what levels are really important to get there. So let's have a closer look at the charts. Let's start with gold, and as you can see here we have an old drawing here inside where I took this here as an end of the movement. It looks like this in the old times. So it is a 1, 2, 3, 4, 5 wave pattern and expecting something like an ABC pattern going down there. But we did not get there. The market came up. It is not a corrective pattern to the downside. No chance to get long here around this area, of course, because the market did not come down here. So it is a situation where we might have something like a corrective pattern looking a little bit like this. You can see this overshooting here. This is something you can see sometimes with something like a corrective, a sideways corrective pattern. It might be something like a flat. You can see it is a little bit coming down, overshooting the old point here and then going down anyway. So this is still possible. This is still valid. But the more the market is now going to the upside, this is getting less and less probable. You can expect this to be not the very best chance that this will happen in the near future. But it is still possible when the market is turning down now after the weekend. If the market is going down into this area here, we still have a chance that there is the end of this corrective pattern, and the market subsequently will turn around and go to higher grounds. Anyway, there might be also another chance. I will destroy my old drawing here. It might be something like we had some different internal structure here with this chart technical pattern, so that the market will continue to the upside. The good part is that most of the time we had strong moves to the upside, we have weak moves to the downside, strong to the upside, more or less weak to the downside, strong to the upside, weak to the downside. Here is a little bit questionable inside or not, but you can see we have strong moves to the upside at least, and something like a corrective looking patterns to the downside. And this is leading us to higher grounds. But while this is happening, the very interesting thing is that we are approaching an old resistance level. You can see the down movement here is an ABC pattern. And normally if the market is breaking through something like an ABC pattern, through the B movement, which is the B wave, the end of the B wave here, we have a very good chance that the market will subsequently continue, not necessarily in one movement. It might be that the market is coming down sooner or later and then continuing to the upside, but reaching this level is opening a door for the bull market. So the good thing is when the market is turning down now, not breaking through this level here. This is the high from end of July. You can see this roughly around 1,835. Please check the detailed numbers on your own chart, but roughly around this level. This highest point here, when the market is staying below that and coming down now in a corrective pattern, for example, then we have a very nice chance that the market is continuing afterwards. If the market is continuing to the upside, it is opening this door. So whatever is happening, most of the indications are leading us to higher ground. So we can expect that the market is maybe in a very good chance that the market will continue not only through this level, also through the high from June, breaking the downtrend channel here anyway. So this is all leading us to higher grounds, targeting levels above 2075, let's say 2100 plus X. We don't know how far it will go, but we can expect some continuations about $100 or $200 or even maybe way more. So the chances are very good. What is countering this idea? There's only one chance that we cannot get to this ground, and this is when the market, when coming back, is breaking through some area which I always have a look at, which is the Fibonacci level. Typically, a corrective pattern should lead us somewhere into this part of the chart. You can see the 38.2 Fibonacci retracement, the 50% level, is 61.8 level. As long as the market is coming down into this area here, we still have a good chance that the market is continuing to the upside here. Only when breaking through this level, which might be roughly 1730 roughly, or even below that, chances are getting worse and worse and worse. So when the market is breaking through this level here, then we can expect not only this one. If the market is breaking through this level, we cannot expect only this level here. We can expect that the market is targeting this area again, which is not my favorite target currently, but this subsequently may lead to the two levels around 1600 or even below that at the lower end of a trend channel. So currently, a setback would not harm the bullish idea, not harm the bullish mood. It could be some corrective pattern like you would normally expect, something like this in an ABC pattern. Sometimes it's not like an ABC, sometimes it's something like this. Of course, it can overshoot first, breaking this level, which is giving us an additional bullish mood for the markets, coming then down in an ABC pattern. So all of these patterns are leading us to lower grounds in a corrective pattern, and should subsequently lead us to higher grounds in the aftermath. However, you may have realized that at the very beginning I was drawing this one. And this does not look like a corrective pattern. Indeed, it is not looking like a corrective pattern. This is the only maybe confusing part here. If this is an ABC pattern here, and this is an ABC pattern here, it might be that this one is a strong move here, which might be something like a typical flat correction. Let's have a closer look at this one. Theoretically, they are looking like this. You will have something like an ABC to the downside, something like an ABC to the upside, and a 5-wave pattern to the downside. 5-way is the strongest kind of movement. It looks really impulsive. It could be, instead of a 1, 2, 3, 4, 5, it could be something like a 1-wave pattern, strongly leading here to the downside. And this is also a very typical one. In half of all the corrective pattern, not half, let's say 40% or roughly around this, can look like this. And additionally, in combination with a double sideways, they are looking nearly the same. But then you have the ABC pattern you would normally expect for a corrective pattern instead. But you can see here in this case, even if you get something like this, this will not necessarily harm the idea. Only two things can hinder this. One is when the market is going below this level, breaking this. The second is when the market is coming inside this level, but then not turning strongly here, coming back in a really impulsive manner, but in an ABC or corrective movement. Then you can expect, wow, the last one was a strong move to the downside, a weak move to the upside. We can expect that the market will continue to the downside and then breaking all these important levels and kill the bullish mood. As long as this is not happening, everything seems okay for me. So two things can kill the bullish mood. The first is a very strong move going beneath these levels here. Roughly, you can keep in mind 1740. It can be a little bit lower below that, but the best would be if the market is not turning so low here. If this is happening, keep in mind it might be even more than $100 additional to the downside, which should be quite typical in this case, a continuation to the downside. As long as the market is not pushing through this level, everything seems to be good. And the other thing is when you have something quite strongly pushing down, but very weak coming up, you always can expect something like a continuation. And subsequently, this will lead us to lower ends and to the same targets here on the downside. If the market is moving a little bit more to the upside, wait for the next setback to enter the market long as you're not long already. If the market is not leading us higher first, but coming down, but in a really shaky way, you can expect after that, the market is pushing us through higher levels. So you can take an intermediate high here for entering the market. Take this like a trigger here for buying the market. The same is for the ABC pattern. Let's take away this arrow. the ABC pattern. If you get something like this ABC pattern, you can also apply something like a trigger level here for buying the market on that when the market is pushing through this level and giving us opportunity to enter the market quite early in the stage here to before the market is continuing here to the upside. So very good chances for the gold price to move to higher grounds. We can expect that the market is going through this level, through this falling trend line, and to this level here, which is the June level. As I mentioned before, all of them are indicating that the market is still in a bullish mood and bringing new money into this market, because more and more buyers will join the group of early buyers here and will push the market and the price forward to higher grounds, leading us to 2,100 and even higher. I'm not absolutely sure how far the market will go after this, but you can expect that the market is bringing us to somewhere here. It could be even 2,300, and sometimes this fifth wave is leading us way higher. It could be something like an extended fifth, but this is way too early to name a certain number here for the price level as a target. But you can see that the market has a good chance to go to higher grounds in this case. So what's about silver? Because the silver market is moving a little bit different, but more or less in the same should move in the same way like gold is moving. And indeed, we have something which is not perfectly is giving us a good idea for what the market wants to do now. Normally, I prefer something. This is the silver price here against the US dollar. This is on a 4-hourly chart. You can see a very strong move here and a really shaky move. And normally, I love to see something like this. What we get instead is something like a bigger ABC pattern, yes, and something strong here, and a shaky one here again, and a strong here, and a shaky one here again, and a strong here, and something quite strongly moving downward, but still in a corrective pattern, because not breaking through this level. So we are still in a bullish mood, but it looks a little bit funny because we have so many overlapping situations here. You can see this setback, this setback, this setbacks. They are always overlapping, and normally it's the best situation when the market is doing something like this, moving strongly, coming back. That's okay, but not overlapping the old corrective pattern, something like we've seen, like we do not see here in my drawing, but we unfortunately see here. The good thing is that this size of a corrective pattern is bigger than this size of a corrective pattern, is bigger than this size of the corrective pattern. So more or less we can guess that this is cascading some different price or wave length. You can just name it like a first wave, a second wave, and now we are in a third wave. Within the third wave, we are in a smaller first wave, in a second wave, and in a smaller third wave. Within this inner third wave, we are in a first wave, in a second wave, and a third wave. And within this, we are in a very small first wave, second wave. So it's giving us something like a matryoshka, a trend in a trend, inside a trend, inside a trend, inside a trend, something like this. This is possible as long as these corrective patterns are always in decreasing size. You can see this is the biggest one, second biggest, third biggest. Here it looks a little bit funny because the size might look a little bit bigger, but the length is also different. So it is still possible that this happens, and this is indicating the last strong up move here is indicating that this trading idea, or this pattern idea is still valid. So as long as the market is behaving like this, everything seems to me okay to me. But I don't want to see the market breaking through the last low, for example, this level. Whatever the market is doing here, it should ideally not overlap same-sized corrective patterns. So something like this, they should not overlap. If we have a big size one, it should not overlap with this one. As long as we have something like this size should not overlap with this coming here, and so on. As long as this is happening, we are still in this inside trend wave idea, so that the market is still pushing to the upper side. When we have some overlapping of same sized or even breaking these levels here, or later this level and so on, we can expect breaking this one will lead us to this one, will lead us to this one, will lead us to this one, and finally lead us into this area here below the $22 level here, roughly into this triangle here between, let's say, 21.50 and let's say 20, depending on what time it is. So depending, a little bit later might lead to lower prices, a little bit sooner it might lead to higher prices, but roughly into this area here. So these are leading indicators. When the market is breaking through this, probability to reach this level is getting higher. Breaking this, even increasing the probability, breaking through all of these levels. So as long as the market is staying above these levels, and ideally don't have too many overlappings or no overlapping of same-sized corrective patterns, then everything seems to be okay. And we still have a chance that this is a little bit too early here. You can see, or let's draw it like this. You can see this is a little bit too high. Normally I would expect that the market is moving here first and from then is turning to the upside. You can see this here, or maybe you remember my old videos here on this, that this would be the more typical situation. But if the market is staying in this pattern, not overlapping, not undershooting these levels here, we still have a chance that the market is continuing here to the bull side, and thus in sync with the gold idea we have. So when one market is breaking through these rules here or through these levels, you can expect that the other market is also in danger to not continue to the upper side. So you can compare both markets in the next few days, and when the market is obeying these rules and it's staying above these levels, then for both markets it should be okay. But if one market is breaking through these early indicators or leading indicators here, these levels, then you may expect that the other market will follow as well. So the good thing is that both markets have a good chance to continue to higher grounds. You already know, or we know already, what it needs to turn around the bull side to the selling side. As long as the market is staying above these curve, above these levels, above these trading behavior, then everything is safe, and we can still expect that the market has a chance to continue to the upside way further. For silver, it might be a really high ground that we can reach. It might be something like a one-on-one projection to the upper side and leading us to, let's say, something way deep into the 30s, maybe 35 or something like this. We can expect something like these levels when the market is continuing easily. This would be a really typical one-on-one projection to the north side. So I hope this helps you, and I hope you will have a clue how we have our looks at the market, how we check the markets, and how we deal with the situations. I'm crossing my fingers for you that you will find your own trading idea, or you may follow this trading idea. You may watch it in the next few days. When we have the chance to make an update, check it out. We will have it here on the channel. If not, maybe you have to wait another week, depending on what time we have all these important levels broken. So let's have a good time. See you soon. Bye bye.